To anyone that does not own Bitcoin, or think they shouldn't for whatever reason, this video is for you. No matter what you think of Bitcoin, there are many reasons why you should own some, and for that reason, this video must be made. This is one of the last times we will ever see Bitcoin's price this low and have an opportunity this great to accumulate some. I'll be presenting to you 3 points. One if you're interested in a short to mid-term position, one for a longer term position, and the last to explain why you should own some either way. By the end, you should have made up your mind, but if you're still skeptical, I suggest researching more about it. Point 1. The greatly anticipated Bitcoin spot ETF approvals. Earlier this year, the largest asset manager in the entire world, BlackRock, filed for a Bitcoin spot ETF. To quickly explain what a spot ETF is, it's essentially a way to buy Bitcoin without going through the complex steps, and BlackRock would hold the Bitcoin for you, like buying it indirectly. This means that any ordinary person with no experience with Bitcoin would be able to have some. With the ETF explained, why does this even matter? Well, it means that all BlackRock users will now be able to buy Bitcoin. Billions upon billions of dollars will flow into this asset. Bitcoin is the best performing asset in human history, and giving all of these people the opportunity to hold it will completely shock its supply and send its price very high. In addition, not only is BlackRock the largest asset manager in the world filing for a Bitcoin ETF, but more than 10 others, including Grayscale, ARK Investments, Invesco, etc. Also, the deadline for the approval of these ETFs is in early January, so we do not have a lot of time to wait. To sum up, many of the largest investment firms and asset managers in the entire world, including the largest one, are all making their own Bitcoin spot ETFs. By the looks of it, the majority, if not all, will be approved at the same time, and this will send Bitcoin's price higher than we have ever seen before. These companies will be competing with one another and will be advertising this new ETF very aggressively, trying to get as many people to buy theirs as possible. Point 2. Bitcoin is the best store of value ever created. Over the course of human history, we've naturally moved towards the best assets possible to use as a store of value. We've used all sorts of things, like seashells, stones, precious metals, etc. But one thing that stays consistent is we always move towards the hardest assets possible. Hardest meaning the most difficult to inflate. This is why up until a little over 100 years ago, we were on a gold standard. Gold has been the best asset to use as a store of value because it is the hardest one to inflate and has the highest stock-to-flow ratio of any asset. The stock-to-flow ratio is the ratio between the stock of an asset and the flow of new production. Gold currently has the highest stock-to-flow ratio of any asset, and as a result, gold's price rises gradually over time. And when demand increases, supply can only satisfy it so much. Unfortunately for gold, however, it will only hold this record for a few more months, because sometime this April, Bitcoin's stock-to-flow ratio will surpass gold's. The reason for this increase in stock-to-flow ratio is because of a phenomenon called Bitcoin halving. Every 4 years, Bitcoin's flow of new coins is halved. This means that it will get scarcer and scarcer every 4 years. When Bitcoin was first created, there were 50 Bitcoins created after every new block. In 2012, 25 Bitcoins were created after every block. In 2016, 12.5, 2020, 6.25, and now this April, 3.125. This will continue to happen until the year 2140, which is when no more coins will be created and Bitcoin will be the first ever truly finite asset. To add on, the issuance of new coins is 100% predetermined and resistant to demand. Historically, when an asset's demand rises, its producers will increase its production, meaning the demand. If the demand is not met, the price rises. And it's important to understand this because when you have an asset like Bitcoin that supply does not respond to demand, things get crazy. When demand for Bitcoin increases, it doesn't care, and its production stays the same. This makes its price go extremely high and makes for a perfect store value. To summarize, we are always looking for better and better assets to store wealth in. We look for assets with high stock-to-flow ratios, and soon, Bitcoin will have the highest one of any asset in the world. Bitcoin's supply is resistant to demand, and its production is scheduled and immutable. This makes for a great way to store wealth, and simply buying some and waiting will make you money. Finally, my third point, Bitcoin will always be number one. Satoshi Nakamoto, Bitcoin's anonymous creator, had a very clear goal in mind when creating his project. He wanted an asset that was completely decentralized and resistant to corruption. He explained in the project's white paper that, quote, commerce on the internet has come to rely on almost exclusively on financial institutions serving as trusted third parties to process electronic payments. He was right, too. Our entire financial system is broken and relies on the trust of its users. A couple years after Bitcoin's creation, others started working on their own cryptocurrencies in hopes of improving on Bitcoin's weaknesses. Some of the most notable examples of this are Ethereum, Solana, Ripple, Avalanche, etc. While these new ones do have some interesting features that Bitcoin doesn't have, they all suffer from one deal breaker that needs to be addressed. They are not decentralized. The very thing that made Bitcoin special in the first place has been removed from these projects, intentionally or not, and it means they are almost no different from the systems we are using today. Take Ethereum, for example. Its proof-of-stake consensus algorithm makes it prone to control, and it will stay that way. I won't explain how proof-of-stake works in this video, but I will make one soon that will break it down completely in order to show how flawed it is. Back to Bitcoin though. All of Bitcoin's competitors are either using a worse consensus algorithm or are led and developed by a central group of corruptible people, or both. With this explained, Bitcoin is the only decentralized asset out there, and trying to create a bigger network is basically impossible at this point. So, to anyone thinking of investing in cryptocurrency, the only real viable option is Bitcoin. In conclusion, no matter how long you want to hold Bitcoin, there is a great potential for profit. First, many of the largest asset managers in the entire world are filing for Bitcoin spot ETFs that are likely all going to be approved at the same time. This will initially send its price rising fast and shock its supply as there will be way more demand than supply. Also, this will attract companies to put some Bitcoin on their balance sheet, which will also shock its supply and increase its price even more. Second, Bitcoin's stock-to-flow ratio is increasing past gold's this April, which will make it a superior store value over all other assets. Third, Bitcoin is the only real decentralized asset out there with this much adoption. With all this in mind, if you are still skeptical, I encourage you to do your own research and learn as much as you can about it, because Bitcoin is truly one of the greatest opportunities we have been presented with in our lifetime. If you would like to see more videos like this explaining the theory, technology, and everything else about Bitcoin, please like and subscribe. And don't be afraid of asking questions. I'd love to answer all of them. Have a great day.